Good day traders, it's Stefanos on behalf of Tixee, and in today's video we'll be giving a look back of the market for the week of the 25th until the 29th of April. Now before we dive into the webinar, one of the key highlights of the week was Facebook's rally after their earnings report, as well as Amazon, who cratered by almost 15% after missing their expectations. As always, please know that all of the ideas discussed in this webinar are my own opinions and do not make up for any form of investment and trading advice, neither any recommendations to buy or sell. You should always do your own research and due diligence before buying or selling any securities, financial products, or instruments, and whether you use any kind of trading strategy. Any information that relates to past performance is not indicative of future results. Now, kicking things off with stocks, as we mentioned, we had some big moves happening in the markets over the course of the last week. Yet again, we're found within one of the hottest periods in the markets right now, as all of the major corporations are reporting their earnings and revenues. Now, throughout last week, we had 8 different stocks, all of which can be found on Tixee's platform, reporting their numbers, but the two most notable ones were Facebook and Amazon. Now, if we look at Amazon first, it missed both the revenue as well as the earnings estimates when they reported their figures after the close on the 28th. So if we pull up the chart as well, we'll be able to see the impact that this had on the share price with the open the very next day. We can see pretty much the whole move towards the downside. Again, this is the gap down as well. And like we mentioned, overall, Amazon dropped by 14.5% or $421 per share, which is also more or less where it finished the day as well as the week. Share prices of Amazon have now crossed below the $2,500 mark, as we can see here. And overall on the year, they're down by 25% or $862. So again, this is like a good opportunity just to showcase essentially the impact that the revenue reports can have. Again, if they're released after the close during a specific trading day, the impact is to be seen the very next day. Whereas if you have the report being released in the morning hours in the pre-market, we're likely to see the impact on the exact same day. And then the other stock that we mentioned, it was Facebook. So I'll just pull up the chart here in the meantime. So let's look at Facebook. So Facebook, it had a pretty quite the opposite day with regards to their earnings. Now they reported their figures on the 27th, and it was after the market close, and it also beat the EPS expectation by 6.46%. Now, as they reported the figures after the market close, as we mentioned, the impact could be seen from the very next day. So if I switch on the daily time frame, we can see here where the little E sign is basically where they reported the figures, and it was after the market close. And with the very next day, we can see pretty much the surge of the price. And if we just measure it, we'll basically see that it was more or less by 17.9, close to 18% or $30 per share. Where it also finished more or less the day. So yeah, overall it was a pretty good day for Facebook investors, again, which came in stark contrast also with regards to the report that was released by Amazon. So yeah, this is with regards to stocks. Now we're going to be moving on to Forex, where we did also have some pretty big moves in the currency markets as well over the course of the week. Now the dollar index, if I just switch again, we'll just pull up the dollar index first. The dollar index basically reached its highest point since 2002. So that's right, that's pretty much 20 years ago after it reached 103.93, which was the highest level on Thursday. Now it's currently also up by 5% on the month. So if I switch on the monthly time frame, we can pretty much see the impact on the monthly scale as well. And we can see this huge green candlestick, which pretty much, if we measure, it's going to be around about 5%. So this month was also its biggest monthly gain since 2015. So if we zoom out, we're going to see it was pretty much around about this area, but it recorded a similar move as well. Now, while the strength of the US dollar, it did come from a hawkish stance from the Fed. We did have weakness amongst other currencies, which also probably contributed to the strengthening of the dollar, as investors are more risk averse. Now, the euro, it kept tumbling. Now, there's no end in sight between the Russian and Ukrainian conflict, and it is something that obviously keeps investors concerned about the EU's energy security, since it relies heavily on Russian imports and the impact on inflation and growth. And meanwhile, on the other hand, we're having some increasing concerns with regards to global growth, as China starts reimposing lockdowns nationwide in order to contain a further spread of the virus. So if we look at the euro dollar first, and I switch this on the weekly time frame, we'll pretty much be able to see the pretty steep drop that we had against the strengthening dollar. Now, the euro dollar was down by 2.5% or 270 pips. And if we look at the pound dollar, on the other hand, it was also down by 2.18% or 280 pips. And lastly, the other one we'll be covering, which was a pretty big highlight as well, was the US dollar and the Swiss franc. But this one I will actually switch on the monthly time frame, so you can see the impact of it as well. Now, the currency pair has risen by 5.5% on the month, or 512 pips, which was one of the biggest gainers amongst the majors. You can see pretty much that it basically had no retracement at all. Almost, if I zoom in, you can see a very tiny little wick, which was a pullback from the highs, but then again, it was pretty much like a 10 pip pullback in comparison to the 500 pip move that it made overall. So you can pretty much see the overall strength of the dollar. Next up, moving on to the commodities, we're going to be looking at gold first. Gold was down on the week, which was pretty much expected given the strength of the dollar and the inverse correlation that those two assets have. Now, the yellow metal, it has broken down even below the $1,900 mark. As you can see, it's $4 below it now, trading at $1,896. So yeah, if we continue seeing some further strength in the dollar, then obviously you can expect some further pressure against gold. So definitely something to keep an eye on. And then the next commodity is going to be oil, US oil specifically, where we'll be able to see that the prices of oil are still stuck in a range between $95 and $116. If I switch this on the daily time frame, it's going to be easier to see. So this is basically when it first entered that range, and we've been trading into it ever since. So this year, it was pretty much the beginning of March. Since the beginning of March, we've been trading within this range. When we reached the high here, we dropped. Then we reached the lower end. We started bouncing a little bit. So we could get another retest of the higher limit of the range. If not, we could have a triple bottom forming down here at these levels. Now, overall on the week, it did rise by 2.41% or $2.46, as we also had a positive oil inventory report on Wednesday. The expectation was to show a build of 2 million barrels, but the actual figure showed only a build of 692,000 barrels. And overall, on the year, of course, it's still an outperforming asset, since it's pretty much up, I think it's up by 38% or $28.66. And yeah, there you have it as far as the look back and review for this week. I hope you enjoyed the video and you found it useful, and I'll catch you all in the next one. Until then, trade safe.